Hey, and welcome back to the channel. If your business is constantly making money, but you're still feeling broke, then this video is for you. Today, we'll cover profit first accounting. We'll cover what profit first accounting actually is, how to save money on taxes, and how to make sure that you're not spending every single dollar you own back into business expenses. We'll also cover what are the best bank accounts, as well as some of the simple first steps that you can do to get this method implemented for your business today. Let's dive into the video now. We'll cover why most businesses feel broke, and that's because most businesses follow the formula of revenue minus expenses equals profit. But we all know that as expenses begin to grow, they begin to eat into the profit margin on your business. Profit can be unpredictable, unreliable, or sometimes even non-existent. This is basically the business method of saying, oh, I'll just save and invest in my personal account, whatever's left at the end of the month. And we all know how that goes. It's important to maintain a strict budget, not only for your own personal finance life, but also for your business as well. Let's dig into what profit first accounting actually means for you and your business. Profit first accounting means you flip this formula, meaning that sales minus profit equals expenses. This means you take profit first, you pay yourself first, and you limit actual business expenses so that the growth of your company isn't stalled, but you're still maintaining and growing your business while paying yourself first. You deserve to be rewarded for the hard work that you've put in growing your business, and profit first accounting ensures this. One of the ways of setting up profit first accounting is by opening up different bank accounts that are responsible for holding money for different reasons. There are 5 minimum bank accounts that are recommended. These are income, profit, owner's pay, tax, and operating expenses. This means that when money flows in, you can subdirect it into these accounts, meaning you have an exact idea of how much money you're paying yourself at the end of the month, as well as going towards your operating expenses. This is an easier way to not only mentally visualize for small business owners how much money they have at the end of the month, but also to keep track of expenses as they begin to pile up and making sure you're not scaling too quickly as you begin to look at the books. Let's look into how this allocation actually works with real numbers behind it as an example. One of the most basic ways of allocating this money is doing 2 different periods within the month where you'll split this money across your different bank accounts. Let's say, for example, we'll do the 14th and the 31st of each month. So a simple starter percentages might look like profit is 1%, owner's pay is roughly 30 to 50%, tax is roughly 15 to 25%, and then the operating expenses, as we already covered earlier, is whatever's left at the end of the month. So let's say $10,000 comes in on this month. We put $100 into profit, $2,000 into tax, $4,000 to owner's pay, and $3,900 to operating expenses. You're not guessing. The system is telling you exactly what you can afford each month, making sure you don't scale your business too quickly. And also, you're making sure that you get paid as well. You're putting your hard-earned time into growing your business. We want to make sure that you can pay your own bills at the end of each month, and profit first accounting guarantees that. Why this actually works, or the expense diet side of profit first accounting. When you have a smaller amount of the pie to put towards operating expenses, you begin to question each individual decision you make. Do I really need that software? Do I stop investing in these random side projects? And you become much more focused on the actual key growth measures to your business. This means that you actually are lowering net costs while actually growing your business at the same time. Now let's look into what to do with the extra profit we have now that we begin to pay ourselves more and bring down operational expenses. Profit is not just for expenses. Profit means that your business is successful and the hard work that you've put in can pay you real results. One of the practical ways that business owners will often split profit is 50% maybe as a reward to themselves and their staff, while putting 50% back into the business. This means that your business is healthy and growing, meaning that you can give back and afford to reward the hardworking members that are operating at your business. We've talked a lot about what profit first accounting actually is. Now let's talk about some of the actual practical steps you can take today to begin to follow this method. The first is reviewing your finances and expenses. The second is actually opening bank accounts and opening those sub-accounts where you can allocate your income into the different levers. The next would be start profit at 1% if the money feels right, and ensuring that you're putting the money away for taxes at the end of the year. What we would recommend is that you're running this for an average of 30 days before changing anything, just so you can see the money begin to compound before making any changes or altering any of the levers in terms of allocation. This means that you have a better idea or better understanding of the expenses behind your business before making drastic changes and ensuring that you're saving money at the end of each month. One of the first mistakes we see is that profit first accounting can feel like friction before it actually begins to pay real rewards. Some of those might be not sticking to tight regiments or abandoning profit first accounting after one tight month. Some might be actually using profit to pay for operational expenses when you feel like you need to or the crunch is on. Maybe it's allocating too often or too frequently to the sub-accounts. accounts, as well as not saving enough for taxes at the end of the year. We would recommend that you review the allocation or review online what some of the best allocations might be for the different accounts. We hope you enjoyed this video and learned a bit about profit first accounting. We'll be following up with more sessions and more videos on this method, so keep an eye out and subscribe to get up-to-date information on all things profit first accounting. Thanks so much. Have a great day.